Welcome back, my awesome people. I have been getting many questions about what the difference between a recession and a depression is, as many people these days, due to their circumstances, feel as though they are in a depression, while others are feeling more of a recession vibe. And a small few are not feeling much, as they are in a great financial position and are not feeling any of the negative economic downfalls. So in today's episode, I will be highlighting the difference between a recession and a depression, where society is now economically, and where society will end up in the next 12 months. So watch until the end. Now, economic downturns are a lousy time for everyone. You may be worried about losing your job and being able to pay your bills, or you may just be alarmed at just how suddenly your investment portfolio has dropped. And even worse, if it's your 401k savings. While you've probably heard the term recession and depression, you may not know what they actually mean and what the difference is between the two. Simply, a depression is a more severe, long-lasting recession that extends beyond a single country's border and into the economics of other nations. So, then what is a recession? Well, an economic recession is often defined as a decline of gross domestic product, or GDP, for 2 consecutive quarters. But it's not always that simple. Over the course of a business cycle, you might see the GDP contract for a period of time, but that doesn't necessarily mean that there's a recession. The National Bureau of Economic Research, or the NBER, defines recession as a significant decline in economic activity spread across the economy, lasting more than a few months, with indicators including decline in GDP, decline in income, rise in unemployment, slowed industrial production, and lack of consumer spending. The NBER's view of a recession takes a more holistic outlook of the economy, meaning recessions are not necessarily defined by one single factor. Recessions usually come from demand weakness, as supply problems can trigger a massive downturn. And as many of you know, there is a massive global supply chain problem currently. From household goods to food products to clothing to electronics. Supply chain problems have negative impacts when factories have to shut down for lack of parts. The automobile industry, for example, has laid off workers at multiple plants, mostly for a few weeks, but some long term. When workers are laid off for lack of materials to assemble, then the economy suffers. The economy reacts with a time lag of about 1 year. So economically, anything that happens now won't be felt until about next year. The greatest risk in the near term is that the Federal Reserve, realizes that much of the recent inflation is long-lasting rather than transitory. And because of the time lag, the Fed may decide to stomp down harder on the brakes with more rate hikes, triggering a major recession. If the Federal Reserve avoids a major recession, it risks not bringing inflation down at all. The longer the Fed waits, the more work they will need to do later. Can a major recession be completely avoided in the next 6 to 18 months? Theoretically, it's possible. The Federal Reserve would have to tighten at just the right time, in just the right magnitude, then return to neutral at just the right time. It could happen, but the odds are very, very slim. So businesses should enjoy their gains while developing plans to be ready for a major recession. There have been 50 recessions in history, from the copper panic of 1785 to the 2008 Great Recession. Most recently, the US has experienced its 51st recession, a 2-month recession in the early months of 2020 as a reaction to the onset of the pandemic. Throughout the 19th and early 20th centuries, recessions were quite common. Between 1945 and 2001, there were only 10 recession cycles, which is far fewer than we had seen in similar periods of time in the past. Some economists use this as evidence that the business cycle has become less volatile. And now I ask you, my awesome people, are these indicators currently happening in our society? I personally say yes, they are. So indicators or not, we are in a recession. Hey, my awesome people, if this video gave you something to think about or something to put on your watch list, subscribe to the channel to get all my updates and investments. And follow me on Twitter at Jacob Rant and on Instagram. And if you want $25 of real cash money for free to buy your favorite stocks, sign up with my Wealthsimple link down in the description box below and start investing. Now, what is a depression then? Well, a recession is a normal part of the business cycle that generally occurs when GDP contracts for at least 2 quarters. A depression, on the other hand, is an extreme fall in economic activity that lasts for years rather than just several quarters. This makes recessions much more common. Since 1854, there have been 33 recessions in the US and just 1 depression. A recession is marked by 2 consecutive quarters of negative GDP growth, even if those periods of contraction are relatively mild. A depression, on the other hand, is marked by a drop in a year's GDP of over 10% or more. And while a recession is often limited to a single country or location, a depression is usually severe enough to have global impacts. Depressions and recessions differ both in duration and severity of economic contraction. In times of depression, consumer confidence and investments decrease, causing the economy to shut down. Similar to a recession, economic factors that characterize a depression include substantial increases in unemployment, a drop in available credit, consistent negative GDP growth, bankruptcies, reduced trade in global commerce, bear market in stocks, falling currency values, and increased savings rates among those who can still save. So, Jacob Rant, now that we are in a recession, what will happen next? Do you think we'll be going into a depression, or will we get out of this recession quicker than we think? Well, my awesome people, all I know is that the next 12 months or so will be prime time for investing, whether it is stocks, real estate, luxury assets like watches and art pieces, or just reinvesting in your own business, as almost everything right now is in major sale with deep discounts. I personally believe that we will enter a major recession in 2023, but not a depression. This will have a further negative impact on all socioeconomic levels. With more interest hikes on the way, supply chain disruptions, gas prices going through the roof, the current Ukraine-Russia conflict, and the upcoming China-Taiwan conflict, which many would say would actually trigger World War III, and the global transition to the New World Order through a Great Reset. There will be many events that will be happening around the world, changing the way we live and operate, and as such, will create a highly volatile and confused market. So the economy will get worse, investments will take a deeper dive, and consumer spending will be at an all-time low as consumer goods will be so expensive. So for those who have been on the sidelines stacking their money, anticipating times like these, well, here you go on a golden platter. The time has come. I personally will be buying more stocks, maybe looking into multi-unit rental properties, and maybe snag myself a decent Pokemon card. Who knows? All I know is that if you are not investing during this bloody environment, then you are totally missing out on a once-in-a-lifetime opportunity, because the Federal Reserve policy will lead to more economic cycles, which many people are not well prepared for, as the biggest declines won't come in 2022, but could arrive as early as mid-2023. And remember, my awesome people, just like all the information I mentioned in my videos, please do your own due diligence, because I am just a clown on YouTube. And again, if you are watching this video and do not have a Wealthsimple trade account and you want free money to trade with and $0 commission fees that won't eat into your profits, sign up with my Wealthsimple link down in the description box below for $25 of free real money. Link is below. So again, I am not a financial advisor, so make sure you do your own research and consult your own financial professional. Thanks. There is so much wealth out there for all of us to get a piece of. So by allowing our hard-earned money make us more money is the key to wealth and the key to financial success. Subscribe, like, and share to help out the channel, and so you will get notified of when I post my REITs, dividends, penny stocks, speculative stocks, and any other investments that I am buying or selling. I want everyone to have the opportunity to get out of this work-life trap by buying back their freedom through investing. So let's all ride together on a journey of health, love, success. So until the next video, stay ranting.